Hey there, good morning, everybody. Chris Franks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on Friday, the 11th of December, 2020, San Antonio, Texas. An overcast, wet day over here. Hopefully, the days are better where y'all are at, and hopefully, you can get out of the house to enjoy them a bit. All this lockdown stuff wrapping up everywhere. It's kind of causing everybody a bit of a pain, right? So hopefully, even if you are in that situation, you're dealing with it real well. It can be tough for people. You want to make sure that you're taking care of your mental health, guys, especially if you're going to try and trade, all right? The last thing you need to do is to trade while you're upset or while you're angry or while you're frustrated or while you're depressive. Those things are not conducive to winning trades. All right, so if you feel that you're in that mood, do yourself a favor, don't trade. All right? So who's here already? Excuse me. We've got Nevlusian here. What up, man? Ross Marks here. Sir Hold is here. LG is here. LG says Scott loves the 4-hour bull divs and oversold as reversals. Thinking this might go back up, get people bullish and dump again. It's possible. We'll take a look at that for sure. Hey there, Block Tech. Good to see you. Clarkman checking in. Sean, hellos there, buddy. Let's see here. Clarkman says, I have to leave early. Could we start with gold? No, we're going to do it the same way we always do it. But you can always look back on it later and find it, of course. Hey there, Greg. Good to see you. Guglielmo as well. Data's here. Let's see here. It's great to have you here, man. Let me see. Rossmark says, neither is being high. Yeah. But yeah, guys, really, if you're feeling... if your mood is to an extreme, I guess is what I should say. I put a little bit more attention this morning on the depressive side of it or the downside of it, because everybody, God, Lord knows, a lot of y'all have been in lockdown for a long time, right? And even if you haven't really, we're still all these restrictive measures. Wear a mask everywhere you're going outside, and you can't be around more than a couple of people and all this thing. And it really kind of puts some psychological pressure on people. But definitely, if you're overly excited too, basically if you're at an extreme of an emotion, you shouldn't be trading. You really shouldn't. You go, oh, but it's good if I'm excited, right? If I'm doing well, I'm excited. No, because it's still an emotion. And it means you're going to ignore the stuff that you need to pay attention to. You're going to have to trust me. Don't argue with me and try and do it. Trust me on it so you don't have to lose that money. Being excited, just because being in a good mood is normally a good thing, it doesn't make it better if you're trading. It's still emotions. Emotions. Notice I've never said bad emotions lose you money. I've said emotional trading. Emotional, that's good and bad, loses you money. For the exact reason I just said there. Because emotions make us, ignore the things that we should be paying attention to. It makes us find excuses for why we should continue doing the thing that we're doing rather than cutting bait and heading out, all right? Hey there, French Bull. Good to see you always, buddy. Let's see here. Should we take lithium supplementation to trade? Mood stabilizers? I don't know about all that. I don't take nothing. Guys, I'm going to tell you right now. From many people online, it seems, I'm sure a lot of them are what you guys say, LARPing or whatever, about drug use, but I don't. I don't do any kind of drugs. I don't really ever go to the doctor. Last time I was at the hospital, I think, was 8 or 10 years ago. I went in the emergency room because I was just so ill from the flu. But other than that, before that, I think the last time I was there was about 6 to 8 years before that. I've been to the doctors like twice in the last 20 years. So I don't take medication there and doing that. I don't take drugs. I haven't drank in probably 2 years. I'm probably what y'all would consider really boring. So I don't know anything about that whole using lithium there to do that. I don't know what I'd say do that. Let's see here. Yeah, confirmation bias, definitely the other enemy. Yeah, but confirmation bias, again, is really just emotion. It's just a branch of emotion. You're looking for reasons to... your confirmation bias is not just looking for reasons why you're correct, but it's also ignoring the reasons why you're wrong. Because, whenever you take a position, you should have reasoning why you believe that position is what you think it is. But you absolutely have to know the other side of that, because that way you know that if price does this other thing and goes through this other level, then that invalidates the thought, the bias that you had, the way you were going. So yeah, all these things, that traders deal with, guys, really are just, they derive themselves in emotions. Impatience, trying to get rich overnight, confirmation biases, emotional trade. It's all about emotions. So, that's the one thing most people don't talk about, guys. Think about it. You got people out there hawking their systems for $1,500, $2,000, and they don't even talk about emotions. They don't talk about the psychological side of it because they have no clue. That's why. They're just trying to get you what they know you want to buy, which is some magical system, some holy grail system that makes you money all the time and you never lose. And you can become rich and famous and wealthy within the next 3 weeks, right? Yeah, let's not do that, guys, all right? Let me see here. Hey there, Marco, checking in from Ibiza. Oh, man, I love that. Good to see you checking in, man. Ross Mark says there's always someone on YouTube who has your back. Bulls have Rowell and Slater. Yeah. And that's and one more thing before we get into this, guys. I just, a lot of y'all maybe, I think for the most part, many of y'all have followed me for a long time. You know me, I think, pretty well by now. But if you're newer, you might think I'm just this bear or something. I'm not. I'm a realist, guys. I'm a guy who's dealt with people like that for a long time. I know what they're looking to do. I know what their ultimate agenda is. And if it just so happens to work out in the way that they're pumping it right now, well, hey, great for them. But don't think for a second that they're not going to cut bait and leave if the market really does look like it's not going to do what they think it's going to do. They're not going to go in there and lose all that money. They're not. So you just have to be careful when you're following these big accounts out there. I'm not saying they're bad people, not at all. But everybody's got an agenda for what they're doing. The reason why we don't, what I do stays relatively small is because I don't do that to y'all. I don't get you hyped up on go, 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 everything's going to the moon tomorrow kind of thing. I constantly give you the other side of it. And if we're coming down, I'll give you the other side as well. I want you to be well balanced in thought and understand what you're looking at. Because as long as you're blindly following somebody out there who's just saying, buy every dip and it's going to the moon, and they don't even consider the other thing, you're likely to lose money. And I know it's fun to be in those positions where price is going up and you're long and it's making money and everybody's feeling excited and happy around you, and it's just a giant party. But that's emotional. That's emotional, and emotions will lose you money. It happens all the time, guys. Even by professionals. Tons of money was lost in 2008, 2009, the great financial crisis. Tons of money was lost in 2001, 2001 with the tech bubble, the internet bubble. Tons of money will be lost at this next downturn. Again, guys, we talk about everybody says, basically, everybody says that Bitcoin has started this new bull movement up, and it may have. But the other possibility that nobody seems to be considering out there is the fact that we are talking about the most volatile asset, the most risky asset, in an environment where numbers continue to look really bad. They don't look good at all. You've got deflation in the Eurozone. You've got deflation in China. You've got the U.S. teetering on the edge of deflation. And yet everybody's like, oh, Bitcoin's going to the moon. Or if you're gold bug, gold's going to the moon. Or if you're into stocks are going to the moon. They've started a new bull trend. When everything is just sending up, just fire. Everybody's talking about how great it is. That's usually an indication that the top, that a macro top is somewhere around that area. And it could be, instead of a bull run for Bitcoin, it very well could be this indication that, hey, this is the big thing you need to be paying attention to. This is the most volatile asset. And people are putting money into it now. At extreme levels. At significant levels. I say extreme levels. But significant levels. Sailor continues buying, You got Tudor Jones who came in. You got other people making bets on it. But everybody's scratching for that little bit extra return right now. That doesn't usually happen till you get toward the end of a macro cycle. So while we can all hope that Bitcoin's going to go up, I just want you all not to be blindly bullish. Don't be blindly emotionally bullish. You can still trade. You can still trade long, guys. But understand the possibility that that may be the indication that you're near the top. And that means price could still go up. Bitcoin could still go up another $4,000 or $5,000. Sure. Doesn't mean it has to turn over or roll over tomorrow. It doesn't mean that we're at the top already, though we could be. We'll see how it plays out. I'm not convinced either way at the moment. I think, as they'll tell you in Discord, and if you've been watching here, I've got some higher targets as well. But I think it's important that you guys understand, especially because most of y'all don't have economics or finance backgrounds, or you haven't dealt with people like Saylor and Raoul and people of that kind of level of wealth, and they don't think like you do in general. I mean, they do to an extent, but overall, again, they're smarter about it for the most part, but they're still going to lose. People like that still lose money every day, guys. So, it's just some things to think about there. Hey there, Brian. Good to see you. Guglielmo says, really hard to believe anyone in this space. It's great to have someone like me. Oh, man, I appreciate that. Thank you. Financial advisors are the worst. Financial advisors are tough, man. What is it? The great cliche that, these people with all this wealth are paying people who drive around in a Ford or in a Honda Accord to give them financial advice. I hate to say, I've got some friends who are financial advisors. They're great people, but, a lot of them missed the drop there that we called well ahead of time back there in February and March. They were completely oblivious to it. They were all rah, higher, like we're doing right now. And then it goes down and falls. Everybody's like, oh, look, black swan event. How can it be a black swan event? I told you it was coming. If it's a black swan event, you can't, it's something that comes out of nowhere. You're not going to know what's going to happen. But yet everything was setting it up. So it just depends on how you look at the markets, and so they came in, they were surprised. So they say, oh, black swan event. That way they can say, listen, it wasn't my fault. Those money managers here can go, hey, listen, it wasn't my fault that your portfolio dropped there. This is black swan event. Came out of nowhere. Hey there, Spooky DC. You always feel guilty when you join too late? Well, I'm glad to see you joining in anyway. Brian, I think I said hi, but in case I didn't, hey there again, buddy. Good to see you, man. In the end, everyone has their own thing to look after. That's exactly it, guys. I mean, that's really how I feel about it all. At the end of the day, we've all got our own agenda. We've all got only ourselves to look after. The only person you can really trust, guys, is yourself. So stop lying to yourself. Stop BSing yourself. Because you are the only one that cares more than anybody else about how well you do or don't do in life. So start being positive about it. Start taking control of that life. Nobody else is going to care anywhere near as much as you have the possibility to care about whether you do well or not. It's completely up to you. And I've said it before. Whether you believe you can or you can't, you're right. Your brain is going to follow whatever you say, guys. Your subconscious is going to follow whatever you say. If you sit there and keep telling yourself you can't do something, your subconscious is going to make you believe that you can't. That doesn't mean you can't, but it means you're going to believe you can't. So as far as you're concerned, you can't. So you got to get out there. You got to do it, guys. All right. What's wrong with Fords? No, I love Fords, actually. I've got a couple. But anyway, jump in here, guys. Hey, listen, if you're new, you haven't joined in yet, join us at howtotradetowin.com. By the way, guys, follow me at TX West Capital. If you are new, we're going to have a very limited offer this weekend to let you get in on Tier 3 for half price for your first month. And it's going to be very limited to how many people we're going to let with that. And so I'm going to release that there on the free side of Discord, and then as well on my Twitter profile there when we release that later, probably later today sometime. It'll be through this weekend. So, if you're new and you haven't ever joined us before and you'd like to check us out and see what Tier 3 is all about and be overwhelmed, because there's a lot of stuff there. Like I said, man, over 50 setups a week, over 30, almost 40 hours of educational video content right now, 20 assets that we track on a daily and intraday basis, chart requests, chart critiques, weekly stream every week with education for tier 3 there. I mean, man, you guys are going to be swimming in content. So just be watching for that. Let's see where we're at here. Hey there, Spiral Architect. Good to see you. Yeah, Rossmark, exactly, man. Sometimes it's the financial analyst, the analysis that gets you. That's right. That's right. So here we are. I'm going to start with the 4-hour here, guys, because the 4-hour does have this bit of a bullish divergence. And so we've got that bit right here. But here's the thing about this particular divergence. It's very, you have a very short lower low here. So that makes it kind of iffy. In other words, if this had been deeper down here, say down in this area here, I would have been much more positive about this potentially being a reversal. But it's just below. You had your swing low over here at 17,640, and then your swing low over here at 17,569. So, basically $80 difference. It's just a little dip. But nonetheless, we do have that, and then we have this bullish engulfing candle here. Now, again, the thing about bullish engulfing candles, like anything else, is they need follow through. Just having a bullish engulfing candle does not say you're reversing. It says you're pausing, potentially reversing. You have to have follow through with another candle following up after it. Right now, we don't have that. Right now, we're kind of dropping, as you can see here, to this previous swing low, which is this previous swing high over here. So this general 17,900 area, if we can pop all down through that, your swing low is next at 17,570 or so. But you should be looking for further down then. I mean, bigger picture here, other things to look at. Stochc RSI, we're moving down here, but Stochc RSI is up here getting ready to pop into overbought again. So with this, if you're looking for a good bullish divergence as far as a reversal goes, often you want to see your Stochc RSI down resetting into oversold as well. And again, you want to see, if you can, a bigger dip between these, a lower low here between this to go with this higher high, or higher low here, I'm sorry. The other thing, again, to pay attention to is the fact that as far as pivots go, we're at the pivot, we're on the S1, so we're still below that S1. In this move down here, we've still got higher high or lower highs and lower lows. So this is a downtrend still. What you need to see right now, ultimately, what you need to see if you want to go long in the safest way possible is a breakout and close here above this swing high right here at 18,654.92 cents on Bitstamp. You want to get a push up and a close above that. That doesn't guarantee price will continue going up, but that is, from where we're at right now, that is your safest long. That is your safest long entry. Beyond that, you want to get up above this high volume node over here at about 19,240 or so. You want to get above that as well. So those are places you'd look for, the upside there. If we zoom in here to the 1 hour, we've got a couple of different counts we're watching here. And if it looks confusing, just pay attention to the colors, either red or purple. Simple as that, all right? Hey, Hank, what's up, man? Good to see you checking in. Let me see here. Yes, double bottoms in theory should be better when the right side falls a bit deeper than the left. Yes, exactly. So, again, yes, potential double bottom. But in order for this to be a double bottom right here, you have to close above this swing high in the middle here. And if that's the case, if you're just looking at patterns like that, your target, just so you guys are aware, your pattern target on that would be about $1,082 above that. So that would get you up here at about 19,737. So if it goes from here, continues up, and gets above that swing high there, I think you've got a provisional opportunity to maybe get a target, a double bottom target up there at around that 17,937 level. But what do we have right here right now? So right now we've got our red count, which basically says 1 and then 2. So 1, 2, 1, 2. And then you get a 1, 2, 3, 4, working on a 5 here for 3. And so that should target this S2 pivot down here right around, 17,320 or so, 17,315. So if this, 1, 2, 1, 2, 3 down there. And if we can get that and we get the pop up here for your reversal and then a reversal back up here at about $18,080 for 4, that would give us a 5 down here, minimum at 16,687. But that 5 is just this larger 3. So that's just this 1, 2, 3 here. And following through with that again, looking at the general extensions that we have, 38.2 retracement up here gets you up to the EQ of this trading range for wave 4 at about 17,775. And then it gets you a wave 5 down here at around 16,000, which takes you on a dip below this trading range. If you guys will remember, since we've been up here, I've been talking about this local range, and then I've told you that I'm much more interested in this larger range right here. And that remains true right now. Still much more interested in that larger range. But that's the red count. Now, our purple count says what we were looking at before. Remember, before we were looking at an A, and then a triangle's a B, and then a C here? Well, the problem with that now is that we've got this big move down, and right here. We've got this big move down, this dip, this big move back up, and then we're coming back down again. So, how do you rectify that? Well, what we do is then we'll look at this as, instead of an A, as a W. See the purple W? So this would have to be an ABC down. Now, in order for this to be a W, this has to be an ABC down. And then you look at, again, the same triangle here, but the triangle instead of B is X. Okay? And then you have a Y. And so your Y is an ABC. So your first move down is A. So again, 1, 2, 3, 4, 5. It follows that same red count. That gives you A, ABC up for B, and then you have what would amount to a C here. All right? And so your C's got to be 5 waves down. Now, when I was looking at this morning, here's the thing. I was looking at this as potentially an ending diagonal as one possibility. And so, for it to be an ending diagonal, gosh, I gotta get this up. There we go. Basically this would be like A, B, C is 1, 2, and then A, B, C is 3, 4, and then we'd have like an A, B, C is 5. That's what I was looking for, something like that. If that were to be the case, then we'd expect that wave 5 should, again, kind of end at the same area where we're looking for the red count to end. That wave 3 of the red count, the same S2 pivot. It's basically where I'd be looking for it to end. And then we'd be looking for a move up. And again, it would take a move above this swing high over here at 18,654 or whatever. You really need to move above that to kind of say, okay, I think that's the bottom and we're headed up. By the way, you can also notice that if we look at this whole thing as a wave 1 up here, this S2 pivot is a 70.5 retracement, which, you guys know I love that. 70.5 is fantastic, especially for Bitcoin. So there's a lot of possibility for that being a bottom area there. However, if we get down here and we bounce, and then we get up around this 18,065 area, and we reverse and head back down, then that potentially has the red count, but this purple count could actually be a 1, 2, 1, 2. All right? So if this is a 1, 2, 1, 2, then we're going to expect it to end, wave Y to end down around this swing low, down here around this 16,220 kind of area, 16,230 area. It's going to challenge this swing low here. And that would be a pretty deep retracement. So I would be, really cautious assuming that this purple count is going to get way down here. I mean, it's still valid, as a 1 and a 2. That would still be valid as long as it doesn't drop below this swing low over here at 16,218. But usually when price gets below that 85.4, that 90% area, most of the time it's going to continue lower. It's going to make a new low. So that's how I usually play it as we're watching. So, I mean, that's kind of what we're watching here at the moment. Let me see here. If we jump over here to the charts, let me see here. That's oil. Let's see here. We've been nailing it every night on these with these TPO charts. Every night on the nightly updates. So far, I mean, for over a week now. We've been getting exactly right every time. Keeps doing what we're thinking it's going to do. So right now, if we're looking at the TPO chart, the big deal is this support which turned resistance up here at about 18,550 kind of area, and then this support down here at around 17,700. Those are the two important areas. If we're breaking above this one up here on impulse, an impulse will move above that. To me, that says we're probably headed up at that point. Here, if we're dropping down below this impulsively, and we recheck it as resistance, then we should be looking for lower. And here's the thing. If we're dropping below this level here, I mean, really, you might get a temporary bounce, a small bounce right here around 17,160. But this point of control down here at 16,800 or whatever is really where your target would be if you're dropping down below this swing low here at 17,550. You're really looking down here towards 16.8. And if you drop down through that, now here's the thing, if you drop down through 16.8, which is this over here, you've got another target here around, what is this? 16,250 or so. And then you've got more support right here around 16,000 and around 15.9. So there's a whole bunch of support in this area here. As well as, of course, then you have this swing low down here around 15,400. And then you have, again, another one of these yellow lines here. Say yellow support line. That 15.2 becomes your big level. You drop through that 15.2, and that really opens up a move down here toward 13,850 or so. And then again, you fall into that area where you have more, a whole bunch of support all through this for $1,000 below that. But you drop on down through 12.8, and next thing you know, you're looking down here probably around 11.5. So that's what I'd be looking at, as it continues on through there. But again, if it moves up above that this yellow line up here, up there above that 18,550 kind of area, at that point, especially if it does it impulsively and comes back and rechecks it as support, I mean, you should be looking for new higher highs most likely, getting you above 20,000. If we're going above that swing high that we've got already, the all-time high, we should be looking probably around 24,100 to 25,000 initially. But until that, we've got to deal with all this sideways. Last night, I noted that we had this. Let me see if I can kind of break this up here a little bit. There we go. I noted for Discord there, for our members, that we had this. Kind of pull this back over here. Relatively small amount initial balance range. We were sitting here at the bottom of the bottom half of it, below it here. I mentioned that we had this huge selling tail here, which shows a lot of confidence in the other side and the other time frame traders. Basically, they feel like price is really overvalued up here. It should be down lower. And I said, if I'm just looking at this, I said, you know what? I believe it's probably headed down. And of course, we had to watch this area right here and this swing low right here. So you had this buying tail here, which was just taken out on this move here. It's filled it in. Now, if I'm looking at this, my big thing about this is we've got this untouched selling tail up here. And we've got price acceptance as it's moving down here. You've got more and more columns. Price is right now, price is believed to be most fair right here at this 17,910. But you still have all this price acceptance here. You have multiple columns across at each time frame. The price is deemed to be most unfair up here right now. So again, makes you kind of think to the downside. The books here, the dome here, shows 64% to the supply side, 36% to the demand side. That's a lot of continued supply pressure, which we've seen as this has walked down. Every night I bring this up for our members in Discord. We take a look at what's going on here to kind of see what's going on. What's going on to see what's going on. And, again, it continues to prove out what's happening just as we expect. So really what we want to see today is, can we get price to close down below the low value area here? We want to see if we can get price to close below 17,780. If we can do that, that adds significant possibility to price making new lows and getting down below this this support here. If price closes above the POC here, above this, right now it's 17,910, but it could change as the day, you know, develops a bit more. But if price closes above that, or especially if it closes up here above the value area, or even better yet, in yesterday's value area here, so it would have to close above 18,200. If it does that, I definitely start thinking a lot more seriously about a potential, at least an attempt at this area up here. But for right now, this large selling tail here remains untouched. And so we've got price acceptance down here. So we'll see if we can get it pushing lower as the day continues on there. Let's see here. What's going on, LXT? Still no final word on Brexit. Man, it seems like Brexit's been going on for like 20 decades, right? I'm just throwing numbers and words out there. It does seem like it's been going on forever, though. Hank says he's short from 18.1 with a target of 17.2. So you can see how that works with what I was just talking about there, if you'd like. Let's see here. Let me kind of catch up with you guys. Are TPO support resistance areas based on POCs? Yeah, that's what we're really looking at. We're looking at the point of control. I mean, you know, there's more to TPO charts than just the point of control, but that's a great place to start. You want to understand what's going on with your buying tails and your selling tails. You want to know what's going on with your initial balance range here. You want to understand your value area and your value area high and value area low and all that stuff. But yeah, the point of controls are a good place to start, because what that's telling you is that the market has spent most of that day trading on that price level. Remember, TPO charts are time, price, opportunity. They tell you how long price has stayed at a particular price level, which may not be the same place where most of the volume has come in. So, you know, again, there's something to be gleaned from that difference. Let's see here. Who is buying here besides Buy My Bags, Billionaires, and Retail FOMO? You act like anybody else has to buy. Somebody's always buying. And, you know, as price moves, you'll also have algos playing out, you know, buying in certain areas, depending on price structure, price action, whatever, market structure. You know, and then potentially you're turning right around and selling it if price does something different. So you've always got all that as well. Let me see here. What do we got here? We've got this footprint chart here, order flow analysis. And so as you can see, after we hit the top up here, you got this 505,500 bids hitting the offer there, and price isn't going anywhere. They're filling a limit order right there. And so the next column down here, you've got a lot of you know, you're skewed toward the sell side imbalances here. Follows through again. So we've got this downtrend going. Telling again, you tried to get some buying, didn't work. They got trapped now because we popped down, pushes back up, try again, trap some more. So now you've got potentially orders. You know, you had these guys trapped up here. So part of this selling is probably some of these guys trying to get out of their long positions. And then you've got them trapped right here and right here again as prices continue to go down. But now you see right here in this area, you can see that we're gaining more of these buy-side imbalances, the green numbers. And then you can see here we've got a zero auction down here at the bottom, which means generally that's usually a place where we're kind of looking for at least a temporary pause. You can see we had this here, and it bounced a bit, and then it kept down lower. Same thing here, pushed up, came back down lower again. But you got more buy-side imbalances showing up right now than sell-side, so looking like you might get a bit of a bounce first and then potentially further down there. Let me kind of open this up a bit. There we go. Now we got all the numbers all the way in. We've got unfinished auctions down here. Again, we had that zero auction here. Price went up, came back down. Then we got more there to the bottom so they could continue to sell down into it. We got more buyers down here after this. This zero auction says we had no more buyers here. So they couldn't sell any further down into it. Nobody's buying. Pops back up, comes back down, and now you got buyers jumping in to buy that dip. Yeah, okay, we'll jump in here now. And so you had this large sell imbalance here, trying to set it down. So prices popped up a bit above it, but we haven't locked them in yet. We haven't actually trapped them down there yet at the moment. But you do see you got 1.43 million in buy orders right here, and that's also the volume POC for this point of control for this. These are 15-minute candles, by the way, here. So for that 15-minute candle, it's right there. Let me see here. I've got my other chart here. This is the 5-minute chart. Let's see, where are we at on this? Below 17s there again. There we go. So again, the other one, this one over here is my 5-minute or my 15-minute chart. This is my 5-minute chart. What do we got going here? On the 5-minute chart, we had a zero auction up here, came down. We had this, as you can see, it keeps hitting a zero auction, and then more sellers come in, so they can continue to buy. We've got more sellers here. You see right here, they were so aggressive with their buying. They went up all through these ticks here. 1, 2, 3, 4, 5. They went up 6 ticks just to buy. So some aggressive buying coming in there. And a fun thing to do is then watch it here. It's fun to watch these when they start filling up. You'll see, for instance, what we're doing here. You'll see all these bids hitting the offer. And you'll see 1 million, 2 million, 3 million, and it doesn't go anywhere. You just got some huge limit order that's just soaking it all up. But this is what we've been watching as it's been moving down daily there in Discord. So, I don't see any reason to think anything's necessarily different at this moment. We didn't complete the auction down here. So it does suggest that we potentially got further down to go, maybe. We did get a zero auction there, though. So what you're going to look for is large fills coming in here and no price advance there, and see if we can get a zero auction in there to kind of send it back the other way. But that's kind of where we are at the moment with Bitcoin. So we'll see how this continues to play out there. Let me see here. You can see the USD CAD down there. Oh, on my chart. Yeah. Yeah, I get the USD CAD, the Euro USD, a few others on here. Working with some things here. I've got the stock market right here. This is the, what do you call it here? The E-minis. Right here, S&P E-minis. Same TPO chart, just this one over here, right here is in blocks. And this one over here are the letters. So they can help you follow the movement that goes in on it. Again, initial balance range right here. If we're looking at the stock market today, the E-minis here, you got a pretty decent, smallish initial balance range here. You got a selling tail at the top. You've got price coming on down here, trying to continue to push on down and fill it in. You've got price acceptance all the way down here toward this previous area right here. So, you could see that continuing down. These are the volume here. This is the TPO chart. And like I said, your volume POC, for instance, is right here, and your TPO POC was way up here yesterday. So, or last night, your TPO POC, point of control was way up here, but your volume point of control was way down here. Two different areas, as I said, they can come out differently there. But again, this tells me we're probably going to continue trending down today. You can look at your dome over here, another view of the dome. You've got a bit more on the buy side right now, about 54% versus your sell side, your supply side there, 46%. So a bit more pressure from the bottom at the moment as they're trying to hold this level. I think that's what's going on there. If you lose that level, though, you've got the next one down here about 13 or about 36.12. So, if you can get through this area, jump on down here at 36.12. Let me see here. Yeah, let me see. So 36.12 will get you. And that'll be from back here on the beginning of the month or the end of last month. Like the 30th of November is where that point of control comes at. Or that 36.12 level. But, again, if you can get below 35.90 here, that opens you up maybe to 35.70. So, there's a lot more going on there with that. But it doesn't look particularly indicative of any kind of strong move up right now. Right now, it definitely does look like it's going lower. And here we go, trying again. We just got to get through that low there. And it brings up that 36.12 as your next kind of initial area there. The zero auction is something different. That's order flow. This is TPO. This is a TPO chart. This is the other way you can look at a TPO chart with just colored blocks instead of the letters. This is, where it has all the numbers, is order flow. And so on order flow, when you have something like this here, on the bottom here where you have this, 188.6 thousand versus zero, that zero is a zero auction there at the bottom. It's a finished auction. Nobody else is buying. They can't sell down any lower. Or I'm sorry, nobody else is selling. Nobody else is buying. I got to get that right. Yeah, I had it right the first time. But then when you get it, it's the opposite when you're getting a zero auction up here at the top. But again, there's so much more to order flow than just, zero auctions and stuff like that. Again, you can run up through it as you see here on the 15-minute chart or the 5-minute chart here if you're really aggressive, if you've got a really aggressive market. And it's not that they're aggressive relative to, buy side to sell side. It's just your buy side is willing to buy up beyond where nobody's selling. Kind of bring this back down here again. Oh, Lord have mercy. What did I just do to that? There we go. So as you can see, you've got all these non-fills all the way up. So they had to chase price up. They had to hit the offer way up here. You had two hit right here at 17,947, and then you had to hit here at 17,950. And that's where you had some ask. And that makes, you had offers there because, again, that's your previous resistance right there. But then it pops up beyond that, and then at the next resistance, you start seeing some more offers coming in. But these buyers are willing to chase price up into that area. They're willing to get through all that where nobody's selling to get up there, or where very little selling is going on. They're willing to continue to push it up. Let's see here. To confirm divergences on RSI, would you use Stochastic RSI or is it better to use the MACD? For me, I don't really use the MACD a whole lot. Not at all, really. I tend to stick with, if I'm going to use the RSI, then I have the Stochastic RSI with it. Again, the idea being that if you're looking at a car, RSI is your speed, Stochastic RSI is your RPMs. Stochastic RSI tells you how hard you're pushing to get that momentum in RSI. RSI, remember, they're both momentum indicators. But because Stochastic RSI is a derivative of RSI, it tells you how much effort is being put into that RSI to move it. So, I tend to often look at that more than anything else. We're looking at it. So anyway, we're up here at the previous swing. Orders getting filled up here. As you can see, we're building up 257.1 thousand right now, 277,000. And so you've got this limit order here that's absorbing, and there it goes. It got filled. Whoops. There we go. It got filled again, chasing up, filling in little nothings along the way to try to get to more interesting area there. On the 15-minute chart, you're showing you on the 15-minute chart here, you're showing larger buy imbalances here. Now we've got these trapped shorts down here and potentially right here. So if it's going to continue up there, you've got this volume area right here around 17,985 and 17,990 for these previous two areas here. And so you would expect somebody trying to defend those areas. If you continue going up beyond there, you should be looking right up here at the next one, right around 18,010 or so for that. But you definitely have a lot of selling going in here. But it is getting soaked up a lot as well as it's moving through there. Especially right here, almost got 500,000. It's getting soaked up at that moment. So yeah. Let's see here. Car analogy, markets at the traffic lights right now. Could be, right? Oh yeah. Thanks, Hank. Yeah, those market. By the way, guys, just in case you don't know, this software right here is Sierra Charts. Go to sierracharts.com. And if you want the order flow here, if you want the what they call them number bars, we call them order flow or footprint charts. They call them number bars. You have to pay the $30 or $35 a month. But you don't have, you can pay, you can get access to a lot of the other stuff without actually paying that. So, the strength of what you get here, it's got a bit of a learning curve, but this is the more professional trading software versus TradingView, which is really retail software. It's made to be easier to understand here and easier to use, but that means it limits what you can actually do. So that's what we got right there. If we jump over to the DXY, let me see here. I just want to point out DXY weekly right now is printing bullish divergence, but Stochh RSI has a bit further before it can fall into oversold. I think it's going to have to hit that oversold area first, which gives it room to fall. Our red line's right there at the S3 weekly pivot, which is 89.81, same thing we've had for a while. And then our other level right below that, 89.52. And, of course, you've got the swing low down here on what I have as wave 4. That's this potential channel here. Right there around, what is that right there? 88.135. If we continue to look at this, again, basically it's a 1, 2, 1, 2, 3, 4, 5. So 1, 2, 3, 4. And working on basically a 1, 2, 3, 4, 5 maybe as it's finishing out here. That's my default right now. It may turn out not to be correct, but right now it's playing out as we generally would expect as it continues to develop with our updates. So we'll see if we continue to get that. I think, you're looking for a breakout really of this line right here. I think no matter how far it's going down there right now, I mean, if it turns around at any point there and gets above this descending resistance on the weekly here and closes above that, I think that's your clue that the bottom's in. I think that's probably the easiest way to look for that bottom being in right there. If we zoom in a bit here to the daily, again, lots of potential going on here. See, the daily makes a good case, but now we're getting this big move up. So we've moved up above this local red resistance. That Stochh RSI is really starting to make a lot of move up, though, without a corresponding real strong move in price. So that tells me again that I think we're right here, that this is some sort of wave 4 maybe that we're dealing with right here. And we'll get a wave 5 coming down a little bit lower. We do have a convergence, as you can see here, as price is converging. But with this right here, potentially looking at this as a 1, 2, 3 here. So this becomes, a 1, 2, 3, 4, 5, which isn't going to be a wedge or anything because there's no overlap. It's not ABCs. But it is something to watch here. You get a 1, 2, 3, 4, get a 5 down here, get a bounce for your bigger 4, which should then come back up to the same area. And then you get a 5 a little bit lower there. But again, I think we're kind of, based on the way this is moving here, like we're kind of getting to these areas where we're going to have more overlap setting up to head over. So just continue to watch that. I haven't looked at the chat, but I'm sure Hank has mentioned his targets again for DXY. If we're zooming in a bit more on that, let me see here, 15 minute. Zoom out a little bit, 1 hour. Here we go. Locally, I'm watching two things here. I'm watching potentially either a triangle forming here for wave 4. So ABC up here for A, B, C for B, A, B, C for C, and then, D and E, and then the drop. Which, if that's the case, our target then on the next decline would be, if we can get a wave E finishing right off around this area, that gets you around 90.22. But again, I think that would just be like that larger 3, and then we'd have a larger 4 up here, and then we'd have 5 coming down just a bit below that as well. I think we're going to see this end up just kind of overlapping here You know, a little bit lower low, a little bit lower low, and then up. But we'll see. We'll see. Again, it's all, you know, it's all about projections and whatnot. But the importance of this right here is that it helps you kind of understand what may be going on with the other markets. You know, if you have a sudden move, whether it's if it's down, your other move, you know, your other currencies like the euro, often gold, silver, are going to have a strong reaction to the upside. Whereas if you have a strong DXY move upward, then those same ones will usually have a strong reaction down. Bitcoin has shown that it's the same way. As long as the DXY goes sideways, it gives, you know, other assets, especially Bitcoin, a little bit of room to kind of do what it wants to do. But it's when those bigger moves come in that, you know, it takes a back seat and does what, you know, does the opposite. So just kind of be watching that. Let me see here. Dollar milkshake theory, still quite possible. What is that? Santiago, right? Has that. So, let me see here. Looking at the DXY right now, wouldn't that be wave 1-2 right now? I don't know where you're talking about. I'm sorry. You guys got to let me know what time frame or whatever you're looking at. Because I get in here and talking, and then I look back and try and see what you're doing. I'd like to answer you, but sometimes it's difficult if I know where you're talking about. Let me see here. Oh, you mean maybe on the weekly? Maybe that's what you're talking about. The weekly here, would that be a 1-2 here? No. 1 2 1 2 3 4 5. 1 2 3 4 1 2 3 4 5. Finishing up there. Yeah, the first chart I showed you was the weekly here. So yeah, that, you know, again, that's how I've got that counted basically. So, but that's a pretty, you know, right now it's still a pretty deep retracement if this is a wave 4. If this is a wave 4, remember I'm looking at this as potentially a 1 and then an expanded flat. So 1, 2, 3 here. Obviously, if we dip down below this here, we'll have to change that up. And in that case, I think we'd probably get a ABC, ABC, and then we have 5 here. So it would just be a flat correction, I think, that would end somewhere in this area, if it was to. I mean, I think that's the other possibility we get here. You know, this could be a wave 4 over here. Again, as an ABC, ABC, and then you've got your 5 here that we're counting out right now. And so as a flat, most often price ends around where wave A ends. And so, you know, just looking at structurally, everything else aside, this is where the demand is. This is where all the activity was back in April and March. So it would make the sense that that's the area you push into and then reverse and head off. Doesn't have to. Again, it doesn't have to. But, you know, if you're looking to how do you kind of get that all work together, that's the way it would be. Now, the thing about that is if you're going to be dollar bullish, that's better than this being 4 over here and this being a 1 and a 2. Because you're just going to start out being bullish, which means the rest of the markets are going to have a heck of a lot of pain to go through. So, you know, something you can watch for there. But we'll see. You know, we'll see where does it go, how does it do there. But, you know, the options are there for what it could potentially be. Yeah, I think that's what I want to say about that. Come back here. So it's impossible that's a 1-2, 1-2 on the weekly? Well, I don't know anything's really impossible on the charts at all. You know, it's how you look at it. But yeah, if you're looking in here, I mean, zoom in, guys. Look, you've got a decline down and a swing high. And then you've got another decline and a swing high. And then really, maybe you've got another one here. I mean, so, you know, there's possibilities here. I've got a 1-2, and then I've got a 1-2 over here. So I've got it as a 1-2, 1-2. Again, just zoom into your time frames, guys. Zoom in a little bit. You can have it like this right here. 1, 2, 1, 2. But, again, it depends on how you want to look at it. However you want to zoom in, it still kind of all gets you, this kind of count that we've got working here with what I just said on the weekly, it still gets you to that same area potentially. So that's the importance of it. Everybody, I think, if they're new to Elliott Wave, they kind of look at it as, okay, this is exactly what price it has to do. And I think the better way to look at Elliott Wave is, do you have a confluence of targets? Does it make sense where they're headed and why, and where they're bouncing and why, or reversing or whatever? I think that makes a lot more sense. Than always worrying about, it's got to be this exact count. As long as you're trying to be exact, guys, whether it's in Elliott Wave or anything else with trading, most of the time you're going to end up losing money. Amateur retail traders are the ones who chase the absolutes and the perfections and the guarantees. Pro traders, man, all we care about is locking in profits consistently and limiting our loss when we're wrong. That's all we care about. And that's why we tend to stay in the market for a very long time. I've been in 25 years now. And amateur retail traders that don't get that tend to be out within 90 days. It's all about mindset, guys. We talk about all this other stuff that we do on the charts here, all these different ways of looking at it. Wyckoff, Elliott Wave, supply and demand structures, order flow, TPO charts, whatever. But at the end of the day, it's all about you. It's all about what's in you. What kind of battles are you facing within your head? That's what it comes down to. Where are your emotions at? How are you feeling? That's the most difficult part of all this. So, the sooner you guys can get that figured out and get that taken care of, the easier the rest of this becomes. Let me see here. Let's see here. That's right. The only thing you control is how much you lose. That's right. So that's what we've got there. Let's see here. Let me pull up some other charts for you guys. We kind of looked at the E-minis there, but let's go ahead and pull up the actual chart here. We looked at it there on order flow. Or no, we looked at it there on TPO chart. Well, let's look at here on the candlestick chart. This is one of the assets that we cover a couple of times a day. Update a couple of times a day there in Discord. So far doing what we thought, what we expected to do. We topped that up here. We went through the pivot. We hit the S1. Stoke RSI is making a big move up while you've got this going on. Price just continues to look weak at the moment. So it's potentially 5 done now, with this ending here. I guess it's just a bit above that wave 3. As long as price remains below this swing high up here, what is this? About 37.13 kind of area, 37.14 area. Yeah, as long as price stays above that 37.15 area, as long as price stays below that, you should be looking more for the downside and potentially a top here. If it goes above that, that invalidates the count and we have to figure something else out. Of course, it's always possible, this could be 1, 2 of 5 heading up as well. So we'll have to see it. What you need to see is a drop below this swing low over here, which is 35.19 and 50 cents. If you can get below that, that's a good clue that the top's probably in. And then what you want to see is a further decline here below this wave 2 here at 32, 31, and 25 cents to really kind of add a lot of confidence to the idea that the top may be in. Further drop down below this big wave 4 here, this macro wave 4 at 31.98. That says that this advance is done, which means if this is the 5th wave, then the other advance is done as well. So the whole 5 waves up should be done if you drop them below that level there. So that's kind of how we watch it as it moves down there. What else do we got here? Let me kind of catch up to you guys. Let's see here. We've got oil here. What's oil doing? Let's see. My count for oil right now, my wave 5 extension from wave 4 here is up here around 48.66 minimum. But when I posted that, of course, I told Discord to be wary of the EQ here at the supply structure. At least we'll probably get a pullback if, that could also be, 5 and done right there. So we'll have to see. If it drops below this swing low here at 45.52, that's the first clue that the top may be in there. Further decline there below this wave 4 would be, or this wave 2 would be a bigger indication, add a lot of confidence to the fact that the top may be in. And that's right there around $40.06. I've got two different counts here. I've got, so before, we were thinking maybe this is 1. So if this is 1, then this back here is 2, and this is the first subwave of 3 heading up. But I've also got a count that has this is 4 and this is ending as 5. Because that count says, what, if you guys have been following me for a while, I had this, I've had this belief that that the drop there in May was a wave 3 on a decline. And so this advances a wave 4. And then we would have, a wave 5 down. So this could continue up higher here, just make it as an ABC as a 4, and then we'd have a 5 lower. And that 5 should probably get pretty close to that May decline. But you have to imagine what has to happen for that to happen with oil. Because remember, the whole idea of what happened, the price collapse in oil in May of this year was due to the fact that there was a glut of supply out there and everybody was still producing, and then there was no storage left, really. I mean, the storage was like at 75, 80%. Worldwide, guys. 75 to 80% of oil storage worldwide was taken. Now, if you're doing Brent C crude, that oil's already on tankers out there in the ocean. So it's not such a big deal. They're already stored on those tankers, right? And, at the end of the day, you don't have to take delivery of the oil. You can do a cash there at the end. But with WTI, with the West Texas Intermediate, you absolutely, if you were holding that contract at the end of that contract's term, you absolutely must take delivery of the oil. You have to. Which means, okay, so if you're doing that, then you're likely looking at Cushing, Oklahoma, which is the hub, for their storage facility there. Well, there wasn't any room there. Because WTI, man, crude oil in the U.S. is sent through pipelines. So you have these hubs like in Cushing. Cushing's a major hub. And so they were full, so you couldn't stick it in there. So price, all of a sudden it got to the point where they had to pay as much as $40 a barrel to have somebody take that off their hands. And that's why we had that price collapse. So if this is only wave 4 playing out, and we've still got a wave 5 lower, what's going to happen? Well, right now we know that they're already talking about, and they're starting to increase production again. So what you would need is continuation of that, plus just the economy just going off the cliff. People not doing well, businesses not doing well, nobody's flying, nobody's cruising. These are the big players with oil. These are the ones that buy a lot of that oil, cruise ships and airlines. You need to see a lot of that going on to kind of get to that same situation again. Now, it would be really weird for it to dip back down there below zero again. That was the first time it's ever done it. NYMEX has been around since, I think, around 81, somewhere right around there. So what has that been? 40 years that's been in existence. The first time price has ever gone negative. So it'd be really weird to have it go negative again all of a sudden here. But that would definitely be symptomatic of a bigger, problem with the economy, with the world economy. Again, as we already talked about, Eurozone deflation, China deflation, U.S. looking at deflation. I know you guys don't want to believe it, but the same thing's going on everywhere else. A lot of countries are looking at deflation. So, just got to keep your eye on what's going on there. So for now, we're looking for a bit higher. If we get this completion of 5 waves up, maybe, we'll look for a pullback around 61,870 and a half. If we get beyond that, we'll look at 78.6. If we get below that, we'll really start considering something different is going on with the count. But until it drops below, this swing low over here, till it drops below 33.83, this count's going to remain valid. It'll just be a wave 2 pullback. 2 of 3 going up. Let's see here. Let me kind of catch you guys here. Hey there, Crypto Mowgli. Good to see you checking in. Let's see here. Oh, man, Pfizer. I don't know what's going on with that at the moment. I haven't checked anything at the moment. The last thing I heard about Pfizer was allergic reactions that are causing deaths. So we'll see what happens there. As a matter of fact, let me just pull it up real quick to see if I can see if there's a quick thing on that. Let me see here. FDA panel gives green light to Pfizer's COVID vaccine. There's another one here saying that FDA's Pfizer COVID vaccine approval means Moderna's is just days away. So we'll see how all this turns out. I don't know, man. I don't know. I saw something about, I wish I had that link. I can't find the link. But something about and I think it was with the Pfizer one. It might have been the Moderna one. But basically there was a link to potential fertility issues when taking it. So I don't know how many people are going to be really excited about taking a vaccine for a mortality rate of less than 0.1%. It was like what, 0.02% or something. I don't know, something really ridiculous. And take the chance, especially young people, that they may not be able to have kids ever. So yeah. So yeah. Hey there, Crypto Girl. Good seeing you. Thank you so much. I appreciate what you say. Let's see here. So I mean, I think there's I think there's a lot of danger potentially in the vaccine. If we think about, okay, if you look for a narrative that could occur, something that could occur that they'd use as a narrative for why the economy tumbles. Let's say they approve Pfizer vaccine and all of a sudden a whole bunch of people get hurt or get sick off of it. Something like that happens. I think something like that could send this, could be used as a reason that why the stock market goes into a tailspin. But of course, these are already things that we're already looking at. Well ahead of that. It would just be the excuse that people would use for it. So we'll see how that works out there. But I don't know. They're saying Pfizer and Moderna could score $32 billion in COVID-19 vaccine sales in 2021 alone. So yeah. Let me see here. Oh, let me kind of catch up with this article here. There's something here about somebody had a no vote. She was going to explain it real quick. Let's see here. Let's see here. U.S. recorded more than 2,700 COVID-related deaths on Thursday. National death toll to at least 292,000. More than 224 new cases, nudging the 7-day average to a record 210,200 daily new infections. More than 107,000 people currently hospitalized with the virus, it says. Let me see here. I mean, global cases 70 million, global deaths 1.5 million. I mean, it's a very, very insignificant amount. Now, obviously, it matters if it's if it's you or your person or your family or friends that are passing away, obviously. But on a realistic scale, you've got 1.5 million of 70 million. There's 70 million cases, and only 1.5 million have died. I don't know that it really. I don't know that I agree that it should have resulted in all the things that it's resulted in so far. And then people say, "Oh, but if we hadn't, we'd have this." Well, you don't know what we would have had because we didn't actually do it. So it's a silly little lazy rebuttal there, I think. Let me see here. The economic toll of COVID has been unrelenting, and experts predict an avalanche of evictions if the federal moratorium expires. Yeah, we've been talking about that for quite a while. Let's see here. And they're saying over there at Dr. Craig Pollack, associate professor at Johns Hopkins Bloomberg School of Public Health, our research suggests that this will be associated with the larger number of cases and deaths that could potentially be avoided if the moratorium were to remain in place. So basically saying that if the moratorium goes out, all these people get evicted, that there's going to be a huge uptick in COVID-related infections and deaths, I guess is what he's saying there. Let's see here. Yeah, man, live events industry lost more than $30 billion this year. I do have some friends that are in bands or singers and whatnot. And they've been hit hard by all this closed down. Texas hasn't been as bad as most places, but it still is caused a lot of issue for anybody trying to make a living as an artist. So yeah, I can definitely see them having a lot of trouble with that for sure. Let's see here. Here's what I was getting at. A member of the FDA advisory panel who voted against recommending emergency use authorization for that said that her opposition was because she did not believe 16 and 17-year-olds should be included. So she's supportive of the emergency use authorization for adults 18 and older. So, interesting. But anyway, a lot of that going on there. A lot going on with that. Let me see here. So, I mean, that's kind of where we're at with that. If we jump in here to gold real quick. Let's see here. There's oil. Let's jump into gold. By the way, as far as oil goes here, you can see this steady decline here with you had zero auctions up and you had zero auctions coming down all the way down here. You've got unfinished business continuing to happen all the way down here. You had this imbalance of buying over here. Imbalance of selling, I'm sorry, here at the bottom. But you didn't zero out that auction yet. Fell a little bit lower, pushed up. Now we're zeroing out and getting that there. And then we get to this point. As you see, we've got all this sideways here. So we've got this range going on here. Again, this is the 15-minute chart. We've got a range here. Oh, gosh, dog it. Where is it? There we go. That's what I'm looking for. So we've basically got this range kind of in this area here. And so within that, I don't know. We've got some oversized buying over here. So get rid of that now. Up here, nothing really else going on. There's some selling imbalances going on along the way. But if this continues to push up, it's pushing up through these zero auctions here. If this continues to push up, these guys could get trapped down here as well as this guy right here and these guys. You could have all this trapped down here, which means they'll unload their positions and attempt to go long, which will just increase the buy pressure heading up toward $46.74. And then, $46.82 to $85, and then up here around $46.94. Just a few ticks moving around with that. But right now, we've got this, we've got it coming to the downside here right now. So you've got the buying. So these guys, if we continue on the other way now, you're going to have these guys trapped up here all these guys, and then these guys right up here. So they bought heavily, into the orders that were sitting there, and now you're getting increased selling imbalances coming down here as we're trying to push down. So if we take out this low here, should kind of send you down lower after that as well. So oil set up for what it is. Let's see here. Gold. Gold I've got here. Gold and silver look pretty much identical. I believe we've got an ABC up here, so I think we've got a 1-2 and then a 1-2 potentially. The other possibility is we've got an ABC, ABC, and then 1, 2, 3, 4, 5. And so, 2 might be over here. If it is over here because of this flat correction, the first target is always around this, this swing high here, which is 1854. If we get above that, then we're looking at this this highlighted area up here as your next target right there around 1865.5. That's also the 70.5 retracement right there at the high volume node. So you could end up getting this as a 1-2 up here and heading down. So what we want to see now is, does price break above that swing high? If it does, it might get about as high as that area up there, but we'll be looking for a reversal and a drop back down below the swing low here at 1826.80. As long as it doesn't get above this swing high, we've got a wave 3 target down here at around 1770. Yeah, right there around 1770 for wave 3. If it pushes up here higher, that'll pull that up a bit, maybe up here to about 1781 at this high volume node. But overall, this is not looking bullish. This is looking more corrective right now, which again is the same thing that we're probably looking at here on silver. Right here. There we go. So same idea here. 1, 2, or 1 ABC is A, ABC is B. 1, 2, 3, 4, 5. Working up here, getting wave C of 2. So 2 could be, over here as well. Gold's a little bit closer to that swing high than silver is. But again, all we're looking for is, if it continues pushing up here, we're looking at, generally this area around 2440 or so, 2442. If it continues above that, then again, we'll look up here, maybe up here toward, 2462 or so. Again, the 70.5, the same area. I mean, yeah, you could still potentially even get to 78.6, but generally I like to look at the 61.8 to the 70.5. If we get a rejection out of there and head back down, we get below the swing low here. I guess this is actually the swing low over here. 23,695. If we can get below that, that should say 1-2 is done and we're heading down lower. Now, the other possibility is we got a 1-2 and then we have a 1-2. So you have a 1, 2, 3, 4, 5. And then potentially A, B, C. Or even A, B, C a little bit higher up here. So you could have a 1-2, 1-2. And if we have that, then you have a wave 3 that's looking to get right here around $23.04. And then a wave 5 potentially down here at $22.76. 1, 2, 3, 4, 5. But since this other 1, 2, 3 has a minimum target down here of 22.49, we would probably see these overextend to get down toward that area. So yeah. Let me see here. So that'll get us, silver and gold there. Just kind of looking for, for that move down. I mean, the count remains valid as long as price remains below that swing high up there, 25.015. If you get above that, go ahead and feel free to go long for a bit, and check your count, what you're looking at. But until then, if you're going long here before then, you should really just kind of consider that it's probably going to terminate prior to that until it proves otherwise. Let's see here. Yeah, so that'll get us right there with everything. That it really matters much. I mean, the only thing we really have is we've got natural gas here. If you guys follow that, if you play some of the commodities, gold and silver, and of course natural gas, oil. Natural gas here, looking at potentially 5 done here, but we're going to see what goes on here. If this is 5 done here, this is a larger wave 4, and we should have a decline down to around 80 or 90 cents for wave 5. Otherwise, this is potentially just an interior correction here. Maybe like a 1, 2, 3, 4, 5, A, B, and maybe this is a 1, 2, 3, 4, 5 as a C. So you move up. So, locally anyway here, you're looking for a breakout of this descending channel resistance. And if you get a breakout of that channel resistance there, you have a pattern target based on the height of the channel here of 0.582 above the point of breakout, which should take it near the previous swing high up here. So that's what we're kind of looking at there with natural gas. Anything crazy we should look for over the weekend for what, Crypto Girl? I mean, I assume you mean crypto, but maybe you mean news events that might, pop or drop stocks on Monday, maybe. Let me know which one you're talking about there. As always go, guys, weekends, you're going to get lower volume, which means it's easier to kind of push price around a bit. I think when you guys think of manipulation, you think that there are people in there making price do whatever they want at all times. There's manipulation to the extent that price can be nudged around, especially in times of lower liquidity. I think that's the best way to understand it. I've heard people argue that, exchanges are out there, manipulating everything. I think if you look at exchanges like Coinbase that are, with that, especially with U.S. regulation, I think it's much less likely, because doing something like that could cause them to lose their money services license, which means they can't do their job anymore. They can't do what they're doing here in the U.S. There's absolutely no way they'll be able to do it. So I think if you look at something like that being, manipulative to that extent, I don't think so. I don't really think I don't think it's there. I mean, I think it's just regular price action, guys. Regular market stuff. Everybody wants to say, but, Bitcoin is such a small market, and these wallets are so big, so people can just do whatever they want. I mean, they could, to an extent. You guys have to understand, the market's not going to do what people don't feel. Somebody can go over there and sell all they want, but you can only sell until you can't find any more buyers. Or people are going to buy. Well, they're only going to buy until you can't find any more sellers. If nobody's selling, you can't buy. That's where we talk about those zero auctions. You get to that level where, in that time frame, where people are where you don't have any more sellers, you don't have any more buyers, and so price can't move any further beyond it. And if it does, it's because they're able to get one in there, and they're able to push the next one up. And when they push for the next one up, it's because somebody else came in. So if you're looking at something like this, where you've got, or let me get the other one here. Let me see here. It's not showing up on this one. It's on this one, the 5-minute chart. So this area where you have these zero auctions here, and it continues going up there, it's because as they continue to hit the offer, they take out everything that's there, and then somebody else comes in and offers more. And so they continue buying into that. And then they clean them out, and then somebody else comes in and offers more. They hit them again. And then that's why you get those there. Or, selling down to the other side there. You sell in, but if there's absolutely nobody under you that's going to sell, or nobody above you nobody under you that's going to buy, or nobody above you that's going to sell, you can't buy any higher and you can't sell any lower. So, yeah. You guys got to watch that, though. All right? So, I mean, that's kind of where we're at there. We've got a big bit of volume going up here on the 5-minute chart here recently, about 5 minutes ago. You can see we have the volume point of control up there at the top. We're trying to get some buying up into that should provide some interesting action there maybe. Whoops. God dog it. Yeah, you had to sell into that. You had to buy into quite a bit there to get it to move up beyond it. But you've got more offers coming in now right there. So down here, you can see you had this move down, and then you have this strong selling into nothing basically. or selling into a limit order down here. 4,002 doesn't go anywhere. Pops back up. So, yeah. So that's what we're kind of looking at, guys. More downside until proven otherwise, and proven otherwise is just this swing high up here. 18,654, 92 cents on Bitstamp. I think as long as you're below that, the safer bet is to the downside. Once you get above that, your safer bet is probably to the upside. So, yeah. But anyway, so there you go, guys. That's it. Don't forget, like I said, we're going to I'm gonna release an offer later today. It'll be limited time or limited duration, limited number. But they're gonna allow you, if you can get in there and get it, it'll allow you to get the first month of Tier 3 for half price. So you can come in and check it all out, absorb as much education as you can in that time. And then, if you don't want to continue on, you don't want to continue on. If you do, well, you know what it is. But I think that's where we're at right now. And we'll see what else we can do here as for the other levels as too, maybe, as December moves on here to getting toward Christmas and all that. So anyway, there you go, guys. All right, so I'm done. Told you what I need to do. I hope we'll see you over in Discord. We'd absolutely love to. Make sure you follow me at TX West Capital. I don't post often, guys. Sometimes I get on little spurts and I'll post quite a bit, and then I'll kind of die off a bit. I'm not much of a social media person, but if there's important information out there that I think you guys should be aware of, I will post it. If we have deals and discounts and stuff and flash sales and stuff like that, it'll be there. So make sure that you guys kind of figure that out and follow along with that, all right? Win a politics show? I hate politics. I hate politics. I know enough about it to know that I hate it. Good stuff, right? It's really kind of sickening when you know how it actually works, and then you kind of see it working out, and you just don't want to deal with it. Listen, guys, hey, I really appreciate you guys joining in. Remember, though, at the end of the day, it's all about you, all right? And no matter how good or how bad the chart looks, there's no guarantees. Remember, trading is speculation, and the definition of speculation says that it includes risk. So there are absolutely no guarantees when you trade, guys, other than if you do not use risk management, good risk management, you're going to be out of the market a lot sooner than you ever want to be, all right? So remember, the most important thing you'll ever do as a trader or investor every day is your risk management, which means you should spend most of your time working on that, not all this other stuff. All right? Risk management is where you make your money. The only thing you control in the market is how much you lose, guys. You guys have a great day, and I will see you all on Monday at 11 a.m. Central Standard Time to talk about some Bitcoin, unless you're in Discord with us, in which case, of course, you get my updates throughout the day and questions answered and all that fun stuff. So, again, if you're not there, we'd love to have you there. Y'all take care. Have a great weekend. Be safe.